Welcome to An Alternate Hugh. I'm Hugh Anderson, and this is some of what caught my attention this week. Please don't stop me if you've heard this one before, because I just couldn't let it pass. Now, I worked in the deli business throughout my high school and college career and slung a lot of bagels and bologna. Some would say I've got a PhD in bologna. But in a recent letter to his shareholders, hedge fund manager David Ihorn detailed the uniqueness of a particular delicatessen located in New Jersey. This business did $35,000 in sales over the last 2 years. That's sales, not profit. But aside from being a very, very small business, two things stand out about this company. One is, this deli is publicly traded. Rare indeed for such a small enterprise to go to all the time and expense of going public, given most small businesses have trouble just meeting payroll on Fridays. The second and more improbable attribute of this company is Mr. Market values it at, now wait for it, $100 million. So by comparison, Chipotle Mexican Grill, with 2,768 locations that generate $2.2 million in sales per store, is valued at $43 billion. I think there's a correlation there. But one of the deli's expenditures is $25,000 monthly, which I don't know how they pay for it on $35,000 in sales in 2 years, but they pay it to a Macau-based firm to build a presence with high net worth and institutional investors. When I was cutting pastrami, I don't recall any institutional investors sniffing around our products. The investing fat party continues. Stay tuned. The big news last week was the public listing of a cryptocurrency exchange. On the first day of trading, the stock surpassed a $100 billion valuation. As noted by Bloomberg, that's more than the venerable New York Stock Exchange and NASDAQ stock market combined. And as we hear more about the administration's tax and spending plans, keep in mind that corporate taxation only contributes 5 to 10% to Uncle Sam's bottom line. Guess where the bulk of the rest of this bottom line comes from? You can look around the room if you'd like. When the stimulus checks run out this summer, Dave Rosenberg says to expect a growth relapse in the economy like we had in the latter part of 2020 when we were between government goodie giveaways. And this time there are no plans for new rounds of individual stimulus. Can we assume, perhaps hope, that someday we'll return to garden variety deficit spending? Just asking for a friend. So E-Trade recently conducted a survey of 1,000 investors with at least $10,000 in online brokerage accounts and found that 3 in 4 acknowledge that the stock market is fully or somewhat in a bubble. 61% say they are still bullish. As Chuck Prince, former CEO of Citibank, said just before the not-so-great recession commenced, keep on dancing until the music stops. Or as Robert Plant would say, he of Led Zeppelin fame and tight jeans, of course, if it keeps on raining, the levee's gonna break. Hat tip to Dave Rosenberg, who didn't write the lyrics, by the way. The Wall Street Journal recently reported how much new debt issuance is going to support unprofitable technology companies. The current easy money, low interest rate environment in the U.S. allows so-called zombie companies to continue to exist and compete against healthier peers, forcing the healthy competitors to meet the zombies on their terms, given profits are not paramount to the zombies. Now, China, on the other hand, is allowing these types of companies to default and restructure. Remind me, which country is the capitalist country again? Now, for the home sweet home file, we have the current state of lumber prices, which contribute 30% to the cost of a home. And then, of course, there's poor Mickey D's. It's estimated that the current federal, state, and unemployment benefits equate to approximately $23 an hour. Cue the robots. This week marked the passing of Bernie Madoff, the perpetrator of the single biggest multi-decade investor fraud in history. So we have some investing words to live by. From Jim Chanos, an investor legend, if you're an investor and you think the regulators are going to get ahead of a fraud, think again. Regulators are financial archaeologists. They will tell you after the company has collapsed what the problem was. And from Michael Gayed, a well-known portfolio manager, risk off will return and will remind everyone that outperformance doesn't come from being up more, it comes from being down less. And finally, a certain vaccine distributor was interrupted due to unfortunate side effects. These side effects have occurred in 0.0000001% of all the folks vaccinated with this particular recipe. Now, I'm not sure how Dr. Jonas Salk, Wilbur and Orbital Wright, or the first human in space, Yuri Gagarin, would feel about that risk profile, but I expect theirs was a skosh higher. So I leave you with this. I hope you learned a little, or at least got a chuckle this week. Either way, I hope you enjoy much health, happiness, and prosperity. I'm Hugh Anderson. Until next time.